From Morningstar, I'm Jeremy Glazer. The market's obviously been focused on issues in China over the last few days, creating a lot of volatility in the equity markets. But how's the strength of the U.S. economy holding up? I'm here with Bob Johnson. He's our Director of Economic Analysis to look at some recent data on the state of housing and manufacturing in the U.S. Bob, thanks for joining me today.
Great to be here today.
So let's start in China. Obviously, that's the big worry now. But are there any signs that this weakness in China that's obviously very much in focus now is having any impact on the United States or will have a major impact on at least the U.S. economy?
You know what? It really hasn't, and you never want to say never, and it can slowly seep into some of the data, especially as stock performance moves in a big way and changes high-income people's spending habits. But in general, the U.S. economy has done well. You know, we've talked for a couple of weeks about retail sales being stronger than everybody had thought and being a very healthy number. And that's a key part of the U.S. economy. And now, the last couple of weeks, we've gotten a lot of data on housing that suggests that things aren't nearly as weak in the U.S. as people think. In fact, we're kind of picking up a little steam.
Now, you've talked about housing as being a driver of the growth before. Why is it so important, given it's a relatively modest part of GDP?
Yeah, I mean, to be real clear about it, it's right now running between 3 and 3.5% of GDP, and that includes new home construction, includes remodeling, and includes brokerage commissions when you sell a home. It's part of the package, and so those three categories are between 3 to 3.5%. It's typically been as much as 5 and as high as 6 or 7. So there's plenty of room to go there yet. And there's some indications that it may be starting to move in that direction with the recent data reports that we've gotten. And also there's knock-on effects from the housing market. Not just do you get building the homes, but you also get it generates mortgage activity. It creates income for mortgage brokers. It creates income for real estate brokers. It creates furniture sales down the road, landscaping money, remodeling money. You know, we've seen Home Depot and Lowe's do much better than expected because people are more interested in spending money on their homes again. So, yes, it's not a huge percentage of the U.S. economy at 3%. On the other hand, it has a lot of knock-on effects that people don't consider.
Let's look at that data. What did new home sales look like?
New home sales were the data that came out this week, and those have been on a tear most of the year. And as readers know, I've been somewhat skeptical about that metric over time because it throws in homes that are on the drawing board and homes that are kind of half finished, and as well as homes that have been sitting on the lot for a couple of years. And actually, I've come around to like the report because it's the only one that shows the number of homes that are purchased that aren't even started yet. And so it gives us a little bit of a flavor of where starts may go. And certainly the new home sales report has been incredibly strong. Over the last 6 months, we've averaged, on a 3-month moving average, year-over-year basis, over 20% growth. That's 6 months running that we've had that kind of total. We've also had sales in most months, so say 5 out of 6, over 500,000 unit sales. And we didn't hit that number for the first time, this recovery, until January. And in fact, up through all of 2013, we didn't even get out of the 300s. And last year we spent most of the year in the 400s, and now this year we're up in the 500s. So new home sales have really done quite well. And again, because you can borrow to buy a home, it kind of gets amplified about what the effect on the economy is. It's something that can grow faster than incomes are growing.
And what about existing homes?
Existing homes, sometimes you get new home sales, and that kind of means existings don't do so well, or vice versa. This time we've got both doing well, which is, that double barrel kind of really shows the greater interest, some of the demographic effects, some of the pent-up demand effects in the housing market are really starting to come through right now. So we've really seen existing home sales at a recovery high, kind of in that 5.5 to 5.6 million units. And last week when that data came out, it was really a nice surprise because some of the pending home sales suggested, maybe it creeped down just a little. It was unusually strong, and they thought it will maybe go down a tenth. But it actually went the other way. And I think people trying to rush before school time to close on the home may have had something to do with that. But it certainly was nice to see that strong as well. So good news there.
And then the starts data shows that this could continue?
Yeah, the starts data also continues to move along, and that's a little bit more of a concurrent indicator. And again, we saw some really nice numbers last week on starts, also kind of near recovery highs and way out of the league of where they'd been just a year or two ago. I mean, we're certainly nowhere near the past peak of 2.2 million, but now we're kind of rather consistently in the 1, 2, maybe even a little bit more on a given month in terms of sales, and that's way off the 500,000 bottom. So again, we're making some progress, and we saw some particular strength in the single-family home market in this latest report, which had been, kind of slow. I mean, most of the interest had been in apartment buildings, and that had been the real driver of growth. Single families did okay, but we had a stellar month in single-family sales. It had been kind of in the 600,000 type of range, and they got pretty close to 800,000 in the latest report. So kind of a big 1 month maybe jump. So maybe some of that gets revised away over time. But it shows that finally we're kind of showing some of the more typical patterns that we're seeing in housing creeping in, which makes you feel really good about the industry, which will really help to see offset any weakness we might see elsewhere in the economy.
Speaking of weakness elsewhere, that's a good lead into manufacturing, which has been weak recently. Are there still signs, or are you still seeing signs of stabilization?
We have, and this week we got the durable goods report, and there what we saw was another nice month-to-month increase, and depending on which way you measure, with or without airplanes and with or without capital goods, we've been up 2 or 3 months in a row sequentially. We're still down year over year. Again, not massively like we'd be in a recession, but we're off 2 or 3% from a year ago in a lot of durable goods categories, and the reason being a weaker energy industry. And, energy was kind of the secret sauce. The direct impact of energy looks kind of tiny, and everybody a few months ago, the companies were talking about, well, it's a small percentage of our numbers, and now as the quarterly earnings have come in, they're a little disappointing. Now it's like, well, you know what? Guess what? It's not very big direct amount, but the little suppliers and the little guys that we sell to, I guess they were selling the energy guys too. And so the impact of energy was a little bigger than some of the companies thought. So we're still down year over year. I think we've got a couple of bad months left on those year over year comparisons. But the month to month numbers at least seem to indicate we've stabilized a little bit, especially in the non-energy. We may have one more bout down in energy with the recent price declines. But I think some of the other sectors may do a little better as the housing market does better, which requires a lot of manufactured goods as well. So that will be kind of that offset that we talked about, that we're very much hoping that improvement in the housing industry is going to offset some of the weakness in manufacturing. And certainly more forward-looking in the housing, we spend a lot of time on the backward-looking stuff, but certainly the demographics is right in terms of the number of people turning 31, the first-time home buyer is certainly positive. And certainly an unexpected lift. We were all fearful about, that interest rates would have moved considerably higher. But certainly with all the hubbub about China and all the uncertainty around the rest of the world, the 10-year Treasury bill is way back down again. And that's how they usually price a mortgage. And so mortgage rates are kind of back down again, giving people another shot again.
So it sounds like there's plenty of turmoil in financial markets, but at least as far as the data shows, the economy is still steady as she goes.
The U.S. economy is still steady as she goes.
Well, Bob, I certainly appreciate your insight today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.